you get to a point where doing a transaction on a blockchain is less energy intensive than a Google search. And so it seems like a silly thing to be like at that point to be worried about. I do think that what blockchain is good at fundamentally is it's computers that can make promises about the actions that they're going to take or that the network is going to execute. So it's really good at transparency. It's really good at trustless coordination. And we've seen it's very good at like providing liquidity and reducing friction in markets. And from like a high level view, trustless coordination, reducing friction, reducing liquidity, like these would be really good things for carbon markets.
Hello everyone and welcome back to another episode of CleanTechies the Podcast. This is episode 42 and today we are talking with Michael Luciani, the founding partner at Exponential Impact. Exponential Impact is a rolling syndicate that has come out of Climate Capital and C3. So they're focused on investing on frontier technologies that basically have the potential to really help save the world. Their belief is that irregardless of kind of the climate crisis and what we're facing here, that we should be investing in these technologies since they are in fact just better, right? So I think it's a pretty interesting take they're looking at here. Again, from kind of the perspective of it's better from a cost perspective, it's more efficient, can free up human capital, identify new resources, and just generally speaking, a better investment into our future. So this is a really interesting conversation. In it, we talked kind of just generally about ClimateTech investing. Of course, we talked about their thesis. Something that I thought was very fun to talk about. We talked about the role that blockchain plays in the ClimateTech investing space. We talked about education, talk about geopolitical perspectives of what government should be doing to invest in climate tech, and from kind of other perspectives other than just winning at the investment game. So it's a really interesting conversation covering a lot of different topics. So I'm really excited to bring this to you. Hope you enjoy the show as much as I did recording it. But before we do get into the show, we of course want to make mention and give thanks to our sponsors, Next Wave Partners, for making this happen. Next Wave Partners are experts in the talent acquisition, recruitment, and retention spaces across the climate tech, renewables, and ESG industries globally. So if your team is growing or you're potentially looking to make a career change, please do reach out to Next Wave. Again, maybe your team is growing as a whole, or you're looking for one specific tough to find kind of talent. Feel free to reach out to Next Wave. They can handle those items. You can reach them at next-wavepartners.com through their website. You can also reach out to one of their consultants directly by going to the LinkedIn page and identifying which consultant might be a good fit for your needs. So without any further delay, let's get into the show. All right. Welcome to the show, Michael. How are you doing today?
I'm doing well, Silas. How are you?
I'm very good. I'm very excited to have you on. I'm really looking forward to this discussion. I think it's been a minute since I've had somebody on talking about the finance side. So I guess for starters, why don't you just kind of give us a bit of an introduction to yourself and what you're doing?
Sure. My name is Michael Luciani. I am the general partner at Exponential Impact. We are a small fund investing in kind of frontier tech climate solutions, generally at the pre-seed and seed stage.
Okay. And so how did you end up getting into this climate tech space?
Yeah. So I actually live in Washington, D.C., and I live in D.C. because, I used to work in politics. I worked in policy and then campaigns, and then started a company in the civic tech space. Had a good run, kind of scaled that up for 4 years and ended up selling it in the 2020 election cycle. After that, I had the privilege of being able to think like, well, what do I want to do with my time? And I followed the thread of kind of entrepreneurship focused on impact. And I kind of came straight to climate, and I realized that there was something I could offer, even though I wasn't a scientist, and it was my experience in scaling up a company. And so I started working with first-time founders, got involved with like the Terra Do community and the On Deck Climate Tech community, and then connected with Sandeepa Ahuja, who runs Climate Capital. And we launched another syndicate on AngelList called C3, and have been very prolific in investing on C3 in early stage climate companies. So I think we invested, I led almost $5 million worth of investment just last year from the C3 Syndicate. And Exponential Impact is myself and a partner, Jenny Kahn, who I've come to work with closely. Jenny is like the yin to my yang. She's a PhD from Cambridge in chemistry and worked in a Nobel laureate's lab. Like everything that I can't do because I'm not a scientist, she can.
Mm-hmm.
And together we have a thesis about essentially climate change as a market pull that's accelerating traction for hard tech and for kind of new solutions to every part of the economy that will change as we decarbonize. And we see increasingly powerful software and data analysis tools as kind of the push that makes all this deep tech, frontier tech, like really difficult physical innovations a lot more possible than ever before. Like this is the first time ever that you can talk to a 2-person team or a 10-person team and they can say, hey, like we're building a private jet that runs on hydrogen. And you can think to yourself like plausible instead of insane because like you now model all of that on a computer and you can do it with 10 people and you don't need to like be making prototype airplanes in a warehouse with a team of 100. It's really cool to see.
Yeah, I think there's several examples, even specifically in aviation, which was a very, very tough one, right? Where people just worked for a few years on the R&D cycle. Okay, that's very interesting. So I guess, I'm always curious, maybe you don't have to go into super detail, but I'm kind of curious to understand, like, what does the process look like to do what you've done, right? To kind of, to do the syndicate and then to do exponential impact. How does that process look? Is it extremely difficult? Because I guess for people listening, there's probably a lot of individuals out there who would be interested to do something like this. Maybe people who've done investment in the past and really realize that there's a need for this. And I think there's plenty of market for more funds to enter the space globally. So I'm just kind of curious, do you have any like kind of major points on how that typically that process works?
Yeah. For me, I have been very deep in the AngelList structures. And so AngelList has created a very democratized investing platform. You can publicly solicit for a syndicate, for example. Like if folks want to go and check out the deals we're running, they can go to C3, joinc3.co and apply and be part of the syndicate if they're an accredited investor. And like that's a great way to just all of a sudden see, what are the deals that we're investing in? What are we saying about them? Like, what are we writing in these memos? What are the key things that we get excited about or that we diligence? I think for me, the next step was then, I worked with Sandeep in kind of developing deal flow and, kind of cultivating an LP base. But those things are, I think, possible in this internet-enabled era, and syndicate investing has become less stigmatized and like super common, at least in the venture world. That it seems like just by putting your toe in the water and then joining, it's pretty easy to join a team that already exists or to start your own syndicate. And there's also not a huge downside for giving it a try. Like obviously with venture investing, you don't want to invest your own money in anything that, any amount that you can't afford to lose, but you also don't have to invest in anything, right? You can just get on there and start to learn and start to use that as fodder to meet people. And I have found it's really powerful.
Mm-hmm. Interesting. Yeah, I guess I've never really looked into it. I bet it isn't as difficult as it might seem nowadays with the technology there. Maybe, could you talk about a little bit? I believe, if I understand correctly, this is a rolling fund, correct?
Yes. So we have the syndicate, and I've got this rolling fund.
So could you explain what exactly is a rolling fund? I'm very unfamiliar with what that means.
No, that's very fair. I mean, like you and everybody else. It's a new structure that AngelList, as far as I can tell, just made up. But the way that it works is every single quarter is actually a different fund. So folks can go to Exponential Impact. I think our website's exponentialimpact.xyz, and we've got a link in there somewhere to our AngelList page. But like someone can sign up at a very low amount, like our minimum is 5K, and you basically are writing or signing up for a subscription, maybe is the best way to think about it. So you say, I'm going to subscribe for 5K a quarter for 2 quarters or 4 quarters. And so every quarter, AngelList, you put in your 5K, and as a fund manager, I get a pool of capital that I deploy like any other venture fund, right? So over the course of the quarter, we deploy into X amount of companies that fit our thesis, and that is in itself its own little mini fund. I think that it's appealing because if you're like me and you're kind of building your reputation in this world and building a career in this world, it's a great kind of step forward from syndicates. But it's not quite as hard as like going out and raising a traditional venture fund. And I was looking at it. I think the average venture fund takes 19 months to raise, whereas you can get a rolling fund up and off the ground in a quarter, in 3 months. So that's a huge difference, right? And we will work with our syndicate. We'll have the syndicate and the rolling fund acting in conjunction with one another. And so it just gives us a lot of flexibility to support founders that we're excited about, and to kind of build a track record and try to build an institution eventually.
Yeah, that's actually quite interesting. I mean, you think about, I guess, if it takes 19 months to raise a fund, that's a really
Right.
a long,
That's the
that's
average.
like an eternity. That's an
Yeah.
eternity in climate tech, right? By that time, you probably missed three new technology iterations. So that's interesting. I think that'll be very important, obviously, going forward as we continue to invest in this space. I'm kind of curious to understand, can we dig into a little bit about what are the kind of criteria that you guys look at when you're evaluating deals?
Yeah. So we're early stage, and we're looking at pre-seed and seed. So the founder and or founding team is really important. We like first-time founders. We like repeat founders. We like founders who have deep domain expertise. That's the most critical. And if ideally, you want to see someone who is the technical founder that owns or created the technology that they're commercializing. And then you want to see a founder who also has some sense of how to commercialize, how to run a business, how to scale a business, how to kind of think about going to market, all that good stuff. So that's kind of one aspect, team. The next is total addressable market. And the thing that people don't realize about climate tech is not impact investing. Like, it's not this kind of warm, fuzzy, like we're going to sacrifice returns in order to save the world. Sure, like if it works, you're definitely making a positive impact on the world. But the markets that the companies we invest in are going after are huge. They're like trillions of dollars, right? It's, we need to decarbonize transportation. So your total addressable market is everyone who uses transportation, or home electrification, everyone that lives in a home, thinking about how to create carbon intensive foods in less carbon intensive ways. Your total addressable market is everyone that eats food. So these are huge, and they have the potential to be, trillion-dollar companies. And so we look at that total addressable market, and we want to make sure that we are backing the companies that can have that giant impact, because obviously, like, if they succeed on a giant level financially, they're also having that giant impact. So we want to see folks going after big markets, both because then that's how you get venture returns, and that's how you get meaningful impact. And I think those are the two probably initial key criteria that we sort on. And then after that, like, there's a process of technical diligence that Jenny will do, and a process of diligence that I'll do on kind of go-to-market strategy and commercialization. But I think that, we can sort out a lot of companies just based on kind of team and TAM.
Yeah, exactly. Yeah, I think it's interesting because the reason I was fascinated by ClimateTech is once I started to understand the financials tend to work out actually in the favor of climate technology, right? Where you actually get better returns, you're using less product of whatever sort it might be. It's almost like you turn a key, right? Because as soon as everybody realizes, hey, climate change is actually a real issue, and we're going to aim to decarbonize these items, and assuming that's a lasting, stance from governments, et cetera, you basically have to reinvent the wheel for everything we do, right? Everything from the materials it's made. So I think that it's very fascinating to see that we've just had this kind of, I always love to see when, when people make these realizations, and then it's like that thing, whatever it is, was there the whole time, but we're just realizing it now, and it's like this humongous ocean of opportunity.
Yeah. I mean, I remember learning about like going on a deep dive in what is made from petrochemicals, and it's everything. it's like all, like everything around you has like all these petrochemical inputs. But something I think is important to mention for us from an investing hypothesis, we don't take as an assumption or a given that carbon will necessarily have a price. So what that means in practice is that we invest in companies that make a product that is just better and cheaper than the current alternative. And so we want them to be able to win, even if there's no penalty for being carbon intensive for their competitors. And that's a big part of what we look for. And, I hope that we will have a price on carbon in the States someday. I mean, my experience, limited as it was, like as a founder in the political world, makes me skeptical that will happen anytime soon. But while it would be great, like it's not necessary for these companies to be competitive and even to win, which is awesome.
Yeah, that was actually going to be my next topic. Was I wanted to kind of hear your thoughts on a carbon tax, how it might play out, how you think it could be administered. Like, just kind of keen to hear your thoughts. And then I think it would be actually very interesting, given that you had some experience in the political realm in DC, to maybe hear what your insights might be into how that could work if it was to happen.
Yeah. Well, let me say this. I built a software company that mostly sold to campaigns. So I didn't work on the Hill. I'm not a policy expert, and there are certainly many people, many of whom are friends of mine in the city, who are much smarter than me on this topic. But that said, I do think that it is very possible to have a measure of kind of carbon or greenhouse gas emissions created by any sort of product or business. And right now there are a lot of competing kind of measurement systems, but they're all relatively aligned with one another. And you could, if you could basically take those measurement schemes, and either the current market price of carbon offsets, or a kind of government imposed price per ton or kilogram or whatever measurement you want of carbon or greenhouse gases emitted, and you could put a tax on it the same way that you do with gas, right? Like, we have a tax different in different states that's a certain amount of cents per gallon for gasoline. And it would be certainly doable for that to be implemented for carbon emissions. I know that the European Union is, instituting a carbon tax, or has instituted, and I know that there are certain kind of trade regimes, like maritime shipping, that have begun to implement carbon taxes on international shipping. And so I think these things are super positive. And I again, like I hope to see more of it. I guess to segue into your question about, DC and US politics, kind of following the progress of the Build Back Better bill, that was, in my mind, it had seemed like it was an opportunity to do something like a carbon tax. And indeed, like the bill had a huge green lens where there was a lot of money allocated for infrastructure around climate change transitions. And that didn't pass, and I think that it was less radical than putting a price on carbon. Um, but so the current kind of polarized nature of Congress in particular just makes me think that it's going to be really hard um, for a piece of legislation like that ever to pass. And if you would probably need a supermajority of Democrats in the House and Senate. And I'm skeptical that even if we had a supermajority of Democrats in the House and Senate, that this would be on the to-do list, or at least high enough on the to-do list that it would actually be gotten to. I certainly hope it would be, but I'm skeptical.
Mhm. Do you think, I guess, do you have thoughts on, again, let's imagine, for example, we are able to pass something like this, if this becomes a thing. How do you think that it should be distributed? Because I think Tom Rand has, in his book, The Case for Climate Capitalism, talks about potential ways to actually distribute the taxes earned from it. I know a lot of people are like, oh, I don't want to, have to pay extra for all my goods, but in reality, some of that money could go back into the economy in other ways. Do you have any kind of ideas from your perspective on how that would ideally look or could look?
Um, Not necessarily. I've thought about this a little bit. I do think that the federal government doesn't get enough credit for the amazing work that the Department of Energy and the ARPA-E programs, in particular, do to give funding to early stage, founders or scientific researchers that are creating frontier technologies. I mean, I think the ARPA-E program is just fantastic, and you know, to the degree that we could do more to support people who are working on climate and to make research on new technological approaches more plausible for folks, I think that would be amazing. That's like a tiny slice, like you wouldn't see it on a visualization of the United States government's budget. So, you know, for me, like I don't have a big pie in the sky thing. I would imagine like we're a nation that runs big deficits. Like maybe we run smaller deficits, and maybe that's a helpful like bipartisan compromise. Maybe I'm silly for still liking bipartisan compromise, but it's been funny, like from a really big picture standpoint. Back in the 90s, there was talk about putting price on carbon, and the Democratic view was much more kind of top down government mandate, whereas the Republican view was like a cap and trade system where you'd have a cap, and if you were above your cap, you could buy kind of credits from someone else that were below your cap, and you'd have a market clearing price of carbon. And that has become the Democratic position, as the Republican position has moved to be like, nah, like we're not worried about climate. And I do think that is really interesting, and I do think there's a lot to be said for not trying to have the government put its fingers on the scale too much in terms of changing the way that a functioning market works. But our market today is not functioning, right? It's not functioning in a sustainable manner that will allow life on Earth to continue without massive suffering over the next 200 years. So, maybe you use proceeds from a carbon tax or something else to tackle some of the initiatives that were in the Build Back Better bill or others, right? Like I think investing in infrastructure in the United States in a green way, whether it's, solar power or roads or high-speed railways. Makes a ton of sense to me.
Mhm. Yeah, I feel like often I'm very, very schooled and familiar with a lot of the things when it comes to how government spending is actually deployed efficiently. But I do think that generally speaking, there's a lot of apprehension to giving the government more money because will they actually spend it most efficiently? Would they spend it as efficiently as a venture capital firm, right? Who knows what they're doing, knows what they're looking at. But I think you mentioned something that's very important, obviously, which is that the DOE has done incredible work, right? Some of the things that they've invested in the R&D technologies has really allowed us to come where we are. So while we're on
And
this topic of, oh, sorry, go ahead.
well, I was going to say, I don't know Jigger Shaw personally at the DOE loans office, but they're kick-ass. Like those departments, both they do amazing work. They're just such a tiny fraction of like the total government spending,
Yeah.
And so it's hard. Like I would love to see them increase in scope, but even that, like you could double or triple them, and again, like on a visualization of government budget, you wouldn't even see that slice of the pie. Like it's so small in
Mhm.
comparison to everything else.
Yeah, I think this is interesting. I'm very fascinated by the geopolitical kind of movements and shifts that are happening, and I'm kind of curious if you have thoughts on R&D investing in general in technology, right, or investment into R&D, especially probably as it regards to climate, because I know that a lot of top military officials discuss how climate change is a massive issue, and being able to have food security and energy independence, et cetera, is a big important thing for them. Do you think, I'm trying to see how to frame this question. Do you think there are governments that are going to likely have a positive outcome right now that that's going to be largely due to their investment in these technologies and trying to identify these kind of breakthroughs? Do you think there's an argument to be made for the U.S. to, in order to maintain, geopolitical standing, to continue putting more investment into the DOE's office, for example? Do you just have thoughts on that in general? I'm very curious to hear kind of what you think.
Yeah, I have a couple of different thoughts that come to mind. Um, one is nuclear. From a regulatory perspective, the United States has made it extremely expensive to open up a new nuclear power plant, and there are huge problems from a public perspective in the optics of that. Like nobody wants that near their house. However, we're actually really good at that. We have operated by the United States Navy, nuclear powered submarines, nuclear powered aircraft carriers. Like we feel confident enough about nuclear power to package it up and put it in a warship that will be hit by like torpedoes. I'm like, yeah, it's bomb proof, literally. Um, and so the fact that we're like unable to deploy that in meeting our domestic energy needs seems like just boggles my mind. And I know Germany, had shut down nuclear power plants over the last 10 years and is now considering reopening them up as they've kind of grappled with energy dependence on Russia and wishing they were a little more energy independent. And I also know China has recently, I think, pledged, hundreds of billions of dollars to open up hundreds of nuclear power plants on the Chinese mainland in an effort to become energy independent. And I do think like as we end up with more and more automated systems, more and more mechanized, industrialized processes and information work, if my factory is all robots and your factory is all robots, the end result of whose product is cheaper is going to be the cost of energy. And your cost of energy right now is lowest on nuclear, lower than anything else. So I think that there is certainly like a competitive advantage aspect in that example. Another is, we think about needing to electrify everything, needing to have, cars that are running on electricity. I think it's especially prevalent to think about this in terms of your home and your transportation. And so for that, we need a shit ton of batteries, like orders of magnitude more than we have right now. Like we need, like Tesla alone is expected to use more nickel in the next 5 years than like the entire nickel supply circulating that was mined last year. And that's one company. Um, so, kind of access to battery metals is another huge one where, I think China has recently done a lot to position itself well. And it's an interesting one because it touches on this regulatory question where we actually have awesome lithium deposits, one of the key battery metals in the United States. We have nickel, we have cobalt, but the current environmental regime has ended up in a place where a lot of those deposits of minerals are in protected lands, right? And so then you get into like a real environmental dilemma. Like, do we need to mine for lithium here, even though it destroys a forest or the ecosystem of an endangered animal? And is that a lesser evil than staying dependent on oil, right? And I think that for me, it seems obvious that we need to be electrified, and that we need to have energy independence, and we need to have access to those minerals and the ability to do that ourselves. And so I would advocate for mining for lithium in the United States, even at the price of some ecosystem destruction, because I think that it is for the greater good to try to get us to a place where we are carbon neutral, and carbon neutral globally and energy independent nationally. But that's these are really tricky questions.
I mean, it's difficult with this one because you want to try to save. I remember I just listened to. I'm a big fan of the All In podcast with Chamath and Jason and those guys, and they were just talking about this, right? Like energy independence in the U.S. has been thwarted because of these, right? And it's all environmental. Generally speaking, it's mostly environmentally focused kind of agencies that have pushed for these things. But as a result, the environment is suffering from it, right? Because imagine if the U.S. could just go quickly build our own nuclear plants, et cetera, or mine these things, right? I think another one that's interesting to me, I'm still trying to decide my opinion on is with fracking, right? And the way we do it being environmentally friendly, yet we don't want to do it, so we just buy it from Russia, and they don't care, right? They don't care how it treats the environment. So that's why I think it's all this kind of virtue signaling, and it's very difficult because if we truly want the best technology, we need to like take a step back and think about all the pieces, right? And to me, I don't know. I'm curious to see how this plays out in the future here. Do you have any insight as to like how these things change? Because I know building on regulation, it's just like this big monster at some point. I think Elon Musk is a big fan of like sunset policies and stuff like that. But do you have any thoughts on how you unwind that?
Well, I think that I want to go a little bit in a different direction with this question. I have a couple of investments that we've made, both with the Syndicate and with Exponential Impact, that I think are good examples. We invested in a company called Renaissance Fusion. That's nuclear fusion. It's a company in Europe, and it seems plausible to me that perhaps we won't have the same regulations apply to fusion as we will to fission for nuclear energy, because fusion is significantly more safe, and just because it's a new thing. So a regulatory regime will have to choose: does the old one apply to this new thing, or will we make a new one? And hopefully we'll make a new one. I think with battery metals, another investment we made was with a company called Impossible Mining that is building autonomous robots. They float above the seafloor, and they use machine vision to grab these volcanic nodules that are just sitting across miles and miles of seafloor. And these things are like chock full of battery metals. the deposit these guys are going to be starting on has $10 trillion worth of battery metals. And it's just like these little circular rocks that spew out of underwater volcanoes. And they're just sitting on the seafloor. And they're doing it in a way that does not damage the undersea ecology. And obviously, like, perhaps not obviously, but the primary way of doing this is dredging, which permanently damages the ecology. We've got another company that I'm chatting with and hoping to invest in that does phyto mining, which I did not know existed. And for others that don't know what that is, there are plants that are hyper accumulators. They're wildflowers, they look like, that naturally evolved to uptake nickel from nickel deposits in the ground. And it's because nickel is poisonous. So if somebody tries to eat them, they die. So great for the plant, but they can be engineered to hyper accumulate even more nickel. And so rather than, strip mining some sort of grassy meadow, there's a world where we plant nickel accumulating flowers and we harvest them, and we are able to mine nickel out of the ground that way. And someone will probably listen to me and get mad. So to caveat, like, that is a highly dependent strategy on the density of nickel in any given deposit, and is not like the solution, but it is a solution. So part of me thinks, like, as we innovate, we find avenues that are unregulated because they were never thought of before. And those things are really exciting. Like the deep sea mining guys, they're in international waters. They're not governed by like the US regulatory regime. I do think that from a policy perspective, though, I'm also in favor of having, some sort of sunsetting. I feel like the US government, gets a lot of flack, but like living and working in DC, I've never met somebody that works for the government that wasn't incredibly passionate, incredibly smart, and just like trying their best to do a really good job. And so, I think the government, perhaps like it isn't the most go-getter, like, or doesn't have a brand of being like on the cutting edge, but that's also because we designed the government not to be able to move too quickly. Like, we didn't want to have a government that could just change on a dime and like upset things, because that can be abused. So while it's frustrating, it's also like, it's at least half a feature, half a bug, not entirely a bug. So yeah, I don't know. I think that unwinding older regulations, definitely probably can and does make sense. But my last kind of like 2 cents on this is, I think the bigger thing is not applying old regulations to new things. Like I'm a bit of a crypto hobbyist, and the United States securities laws were written after the Great Depression, and they didn't imagine like the internet, let alone like cryptocurrencies, right? And so it's good to want to protect investors, and we should do those things, but trying to apply laws from 100 years ago is probably not as beneficial as trying to create something new that's purpose built for a new circumstance. And I think we'll get better outcomes from that.
Yeah, it's actually interesting. Every time you switch topics, it's exactly the next question. I wanted to ask what your thoughts are on the intersection of blockchain technologies and climate tech in general. Where I've heard some people doing interesting things, especially around carbon accounting, tying it to the blockchain and a few other things. But I'm just kind of curious to hear your thoughts, because I know sometimes people think that they can't be together because of at least many people think, the energy intensity that is involved with anything regarding blockchain, which you and I probably know is not the same, is not always the case. But I'm just kind of curious to hear your general thoughts and where it might be applied and where it's kind of useless.
Yeah, it's a really good question. I do kind of feel like the idea that blockchain is not good for the environment is one that like seems insane to me. Like nobody went around when Netflix got big and was like, I can't believe we're like spending our energy on Netflix. Like, think of the energy it costs to like run all those servers. Like, I don't know. So like the fact that we're taking some other new technology and applying that argument to it, it's like, why pass a moral judgment on something that is in its infancy and hopefully will do much more good for the world as it grows than, I don't know, most of the other things we use energy on. But I think the second point I would make is like, Bitcoin is soon going to be the last cryptocurrency that's using proof of work, which is the really energy intensive like computing that mines Bitcoin. So as Ethereum is switching to proof of stake, I think in July, maybe June, I think July. And most other ones are on proof of stake or proof of history or different less energy intensive things. Like you get to a point where doing a transaction on a blockchain is less energy intensive than a Google search. And so it seems like a silly thing to be like, at that point, to be worried about. I do think that what blockchain is good at fundamentally is it's computers that can make promises about the actions that they're going to take or that the network is going to execute. So it's really good at transparency. It's really good at trustless coordination. And we've seen it's very good at like providing liquidity and reducing friction in markets. And from like a high level view, trustless coordination, reducing friction, reducing liquidity, like these would be really good things for carbon markets. And we've invested in a company called Nori that I really like, and another one called Climate that are both kind of in the world of Nori carbon offsets on Ethereum and Climate kind of a oracle for climate related events that I think has a lot of potential in both cases. I guess I don't know how much people will want to get into this, but yeah, there was a company called, or a protocol called ClimateDAO. It was a fork of the Ohm protocol, and they essentially got a lot of people to put a lot of money in to their protocol, which was meant to be locking up carbon offsets, right? And like taking them off the market. And my understanding is that they've had some trouble, as many Ohm forks have, with maintaining like liquidity and infusions of new capital. But that seemed to spark like a ton of projects. And I feel like I see like 2 or 3 or 4 or 5 like every week. And at this point, it's really hard for me to think like that one of them has a huge advantage over another. And I think that, you know, a big unsolved problem is that you've got to connect whatever network you're building to the physical world, right? So if I'm really going to buy a carbon offset, whether it's on the blockchain or not, the biggest question is not, is this on the blockchain? The biggest question is, what did I actually buy? Like, is this a piece of land that I now kind of own, or own the rights to make sure these trees aren't chopped down? Or like, what is this? And who guarantees that the thing that I think I bought actually, you know, continues to be true? And you know, there's the problem of double counting too. Like, is this plot of land being sold multiple times? And sure, you can't double, like, blockchain is great for not being able to double spend, but that this is a human generated input, whether or not you're double listing a certain property. And like blockchain can't solve that. That's like a human problem. So I do think that, like, you know, all sorts of new tokenized carbon credit protocols, sure, one of them will win, and like, or multiple of them will win. Like, there will be a tokenized carbon credit market that is ubiquitous and really meaningful in like pricing carbon and removing carbon. But I think the big unsolved question is like making sure it's connected to the real world in a meaningful way, not like the tokenomics and staking mechanisms and whatever else like that you're working on in crypto world.
Yeah, I think sometimes those things get super detailed because it's no offense, but it's the very, very nerdy people working on these things, just like geeking out about these mechanics, where it's like, hey, the average people in the world want to understand exactly what's going on. Give us like a basics idea so we can have a nice user interface and stuff like that. I think this plays a bit into it's kind of two questions, which is, can DAOs specifically, do you think they could be a good vehicle for raising funds to invest in climate technologies? And do you think, again, I think it's probably pending regulation, but do you think that it can be a helpful tool in ensuring that the gap between the rich and the poor is not further exacerbated as people, as we continue to invest in climate? Because I'm always curious to try to understand it from the S perspective of ESG. How can we make sure that that gap's not getting bigger, and maybe potentially engineer it in a way that it helps close that gap in some ways? Do you have thoughts on that?
I have a whole lot of thoughts on that. It's a really interesting question. So DAOs, as a structure, I think we're still figuring out like how they should work, right? Like, for people that don't know, it's a decentralized autonomous organization, which is, it's meant to be kind of a new experimentation almost with organizing human interaction. And to say that in like a more normal way, it's almost like a different company organization structure where you're trying to get people to do something. Usually they look like startups at this point in time. They're creating a product or selling a product, but they have extremely flat reporting structures where anybody can kind of show up and say, here's the tasks to be done. Like, I'll go do this one and come back, and then they'll pay me. And the DAO is kind of voting on what those are and how they're organized. And so I do think, like, from a coordination perspective, it's just fascinating. Like, and we're just in the beginning. Like, we'll see more experimentation, and I think that I'm sure I have not even started to imagine like what these things could look like. The thing that often is characteristic of DAOs that I think is relevant to the second part of your question is that they often will pay people in their own tokens, right? So I'm like a member of the Index Cooperative DAO, and if I do a task for them, they pay me in index tokens. And there is a market for index tokens, and like people can buy them, and I could sell them if I wanted money, like USD that I could spend on my rent rather than index tokens. And that market essentially is like a liquid market for the stock, and it's not actually stock, obviously, but it's a market reflective in some way of the value externally perceived of the index coup at any given moment in time. It's like their market cap of all their liquid and circulating tokens. And the thing that is interesting to me about that is, like, I talked earlier about how excited I am for the companies that we're investing in, and how I hope they will change the world, and how I know they're going after these trillion-dollar markets and will be enormously successful and enormously profitable if they succeed. But for most of the last 20 years, or all of the last 20 years, for all the history of venture capital in the United States, you have to be an accredited investor to invest in private companies. And even then, like, you really need to be like a qualified purchaser, which is a whole nother fancy thing where you would need to be even more extremely wealthy because you want to invest in like the top tier venture firm that's investing in the best companies. So what I hope to see with crypto is like more companies and with DAOs, more companies, more DAOs that are successful and exciting and having an impact, that are open to public participation, whether it's as token holders or contributors, so that people can feel a part of, can actually make a meaningful impact directly by helping this whatever DAO with its mission, and can benefit from that upside and like hold those tokens and have them appreciate in value. So I think that's the promise of crypto. Like, I don't know. I don't know of any like hard tech companies that are tokenizing, but I think we will see more companies do it. I think it has meaningful network effects for generating support from your users and your customers and your investors. So I don't know. I feel like you asked a question with a lot of parts, and I'm not sure I hit all of them, but hopefully that was
that's
something.
okay. It's mostly just a talking point because I always like to
Yeah.
hear. I think you did. I think it's very interesting. The thing I was hoping to get to is what you mentioned, which was the accredited investors issue, right? That it basically precludes many people from being able to invest, and to get to that level is relatively difficult, right? Especially if you're starting out with kind of maybe the American dream of being an immigrant here and kind of building your way up. So I think to me that's one of the very fascinating aspects that I'm keen to see change. I guess I'd be curious. I probably have to do some research afterwards. I'd be curious to understand who created the criteria for being an accredited investor, and kind of what the history of it is. I'm assuming it had good intentions, but with many things in U.S. history, we find out that there wasn't necessarily great intentions behind it all. But anyways, I think maybe just a couple last things to close out with. I would like to hear your thoughts, generally speaking, on education and as it relates to understanding climate technology, just maybe climate change in general, but I'm more curious about climate technology and kind of the finance side of things. I feel, I guess from my perspective generally, that it's going to be a very important part of the future for pretty much any part of the world, but especially in the United States, I think. And I'm just curious if you have thoughts on what universities are doing, anything you've seen being done, maybe resources you think people could look at, just generally speaking on that kind of intersection of education and climate tech.
Yeah, good question, and very nuanced. Like the first thing I think of is we love to invest in founders who are coming out of academia, right? Who are taking their PhD or their body of work and saying, rather than going and working at a lab or for a big company, I want to commercialize this thing that I built, and I think it will, help revolutionize whatever industry that they're going after, and hopefully, if they're talking to us, we'll have a meaningful climate impact. And what we find when we work with those people is that they're incredibly smart, but they are used to very different norms that come in from the academic world, right? There's whatever the opposite is of the move fast and break things. It's like the move slow and don't get in trouble mentality. And so that is a big kind of cultural shift. And we help educate those people that we work with. And we actually do a series every other week. That is our office hours. It's on our website too, the Exponential Impact.xyz. And we have early stage founders who are like very early in their journey, or people who are just thinking about starting a company, come every other week. And we have featured guests, people from tech transfer offices, people from our portfolio, talking about their experience and asking questions. And we do that because it's helpful in this cultural shift. And because these issues are so nuanced, like a hard tech founder not only needs venture capital, but they should certainly be looking at debt financing, right? They should be making use of government grants like the ARPA-E program that I mentioned. They should be making use of venture investment. They should be making use of non-dilutive financing and debt instruments to scale production. And that's super different from the software world. And like a lot of venture capitalists or entrepreneurs that come from software, don't know anything about that stuff because it wasn't relevant in software. So I don't have a good go-to resource for here's how to navigate that. I'm sure that one exists, and if somebody finds it, please tell me what it is. But I don't know what it is off the top of my head. I do know that on a case-by-case basis, it's something we think a lot about and help our portfolios companies to navigate, but it often is different depending on what one is working on.
Yeah, I feel like that's something I've noticed with a lot of the founders I've talked to on here is it's obviously a very different world from software, right? Where software is you can change the product to solve whatever problem once you identify the problem. right? But in this case, it's normally we have a specific problem. Now we need to create, we need to create the solution, and that's science-based, right? It's a very scientific process, takes a lot of time. And again, people in academia, like you said, they don't want to upset things.
Right.
It's not always the case, right? But it's generally the case, right? Because they have to make sure that they don't go against the scientific community, et cetera. So I find it fascinating how these things might change and how they can work together in the future. I think the thing I'm always frustrated by is how long, you don't know how long it will take to come up with, R&D breakthroughs, right? And it's like,
Yeah.
as somebody who likes to go fast and break things, that's a frustrating one because you can't measure it, right? But but no, this was great. I think we can kind of end it here. Was there any final thoughts you wanted to offer? Otherwise, I think this was a really, really awesome discussion.
Well, I think the final thought that I would like to put out in the world is, if anything that I'm working on is of interest to anyone listening, please feel free to reach out to me. My email is michael@exponentialimpact.xyz. And we'd love to talk with you. And other than that, I wish we lived in the same city, Silas, because I see a bunch of Settlers of Catan behind you, but maybe someday we can play Settlers of Catan, and that'd be awesome.
Yeah, absolutely. I think definitely everybody listening, please do reach out. I think it's important to network in this space. It is a relatively tiny space. But yes, thank you so much for coming on, Michael. And whenever you're in New York, let's have a game.
Sounds good, man. Well, thanks again for taking the time. It's been a pleasure.
Yeah, absolutely. All right, everybody. Thank you so much for joining on this episode today with Michael. I really hope you enjoyed the conversation. If you would like to continue hearing more of these conversations, please do subscribe and turn on notifications to be made aware of episodes in the future. Especially if you're listening on Apple Podcasts, we really do appreciate a 5-star rating and a review. It really does help us to gain broader reach. Please do share with your friends who might find this interesting as well. I think this topic today was something that's very general and could be very interesting for many people. So please do share with at least one person who you think could be interested in learning. If you're interested to continue to get further into the space, maybe you're new, feel free to join our Slack channel as well. There you can kind of connect with myself and other professionals in the space and potentially, look for some collaboration. Maybe you're looking for funding, etc. Glad to connect with you there. Of course, please do subscribe to the newsletter, which comes out on the 27th of every month, going deeper into one specific topic generally and kind of touching on several different companies in that space. And of course, please do connect with Michael on LinkedIn and look into what they're doing at Exponential Impact. I think there's probably a lot of people who might have a chance of getting funded with them, potentially could invest with them. So they're really, really interesting. Just it's worth having that connection to make the acquaintance and potentially work together. And of course, reach me on Twitter with any questions you do have. Do want to make a quick teaser for next episode. We will be talking with somebody that I know pretty well, Bhaskar Ray of Hama Q Cells. So Hama Q Cells is a renewable energy IPP, and Bhaskar is a veteran in the renewable space and the transmission interconnection space. So he's really a deep expert when it comes to the grid, to the interconnection aspects, and kind of just generally speaking, all things related to transmission interconnection. So really, really excited to be bringing this to you next week. We will be discussing a lot of things from, what is the grid in general, how does it work, the general issues of the grid, interconnection, kind of the regulatory problems that we face, some of the solutions to these issues, and a lot more. It's really, really interesting conversation. Super excited to bring it to you. So please do tune in next time for that. But until then, thank you so much for listening to CleanTechies the Podcast, and we'll see you next time.